Well, have you ever seen the TV show MythBusters?
I have.
Where those two scientists, they get these crazy, like, scientific myths, and they try to bust them, and they either debunk them or they say, "Yeah, this actually works."
It actually irritates me because some of the ones they bust are ones that I believed in and even told people like my kids that they were real. But yeah, I know
Yeah.
exactly what you're talking about.
So today, Mike and I we're gonna be kind of your MythBusters today. We're gonna go over 7 myths about taxes. And the first one, and the biggest one, the whole crux of this podcast, the whole crux of our whole career is that the Internal Revenue Code is not your enemy.
Tax law is not your enemy.
It's not.
I hate it when people say that. I hate the fact that the supermajority of this country believes that. That's what we are trying to change. That's our mission in this life, or at least our vocational mission in this life, is to convince you no, the tax code is not your enemy. The tax code could be the best friend you've ever had in creating your wealth and financial freedom.
Yeah, it could be a huge asset for you. Now, are taxes the enemy? I think they're good and bad. I think it serves two purposes, but you shouldn't pay any more than you're legally obligated to. And so, if we could utilize and leverage off the Internal Revenue Code for your wealth generation, what if we just took through a different lens the view of taxes instead of this heavy burden of obligation I have to do every April? What if we viewed it as this is an actual asset to my life, and I'm able to actually generate some sort of savings off, what I'm supposed to be actually paying. I'm saving that in taxes and reinvesting that and growing my wealth.
Yeah, let me ask you this. If someone came to you, I mean, pretend that you're not a tax guy, right?
Okay.
Pretend that you're not Kevin Schneider.
Sure.
If someone came to you and said, "I can guarantee you a way that you can double your ROI every year on whatever investments you're making,"
Hmm.
would you be interested?
Yeah, I'd have a coffee with you.
I can guarantee you, the listener, right now, that there is a way to increase your ROI on your wealth generation, on creating your financial freedom. Guaranteed. If you haven't started unraveling the incentives, the benefits, the power behind the tax code that is there for your taking, you need to start now. Listen up. Like and subscribe to this podcast because we're going to show you a lot of them. There's a whole lot of goodness in the tax code, and I love the tax code. I live and breathe the tax code. Kevin and I nerd out on the tax code because it is that powerful. We're not making this up just to sound splashy. Seriously,
Yeah,
we're not.
we love it. Yeah, and we actually have clients that love filing taxes, and we're going to get into a different myth later. But just because you get a refund is not always good. So yes, view the whole tax filing process, even though it may be confusing and cumbersome with the forms and the schedules and the deadlines and all this stuff. Get a professional to help weed through that mess with you and actually view taxes as a good thing every April because you've enacted a strategy all January through the prior January through December. If you did not do any planning January through December, and then you have to file your taxes that following April, yeah, I might be dreading my taxes too because one, you don't have a plan. If you don't have a plan, it's not going to go well. And you don't know what to expect. You're like, I think I'm withholding. I don't know. I'm going to take my W 2 or I'm going to put it on here. My wife works. I'm going to put her W 2 on here. We're going to see what comes out the other end. And hopefully I'm in a better position than hopefully I don't owe. That's a scary place to be if you're making substantial money or even if you're not making substantial money. I mean,
Can I jump on my soapbox just for 30 seconds and then
sure.
we can move on? The myth that the tax code is your enemy is hurting you if you've bought into that. Understand what the tax code is. The Internal Revenue Code is the law that creates our tax system. It's the highest authority in our tax law. Understand what's gone into it. Our government, our society has elected the people that are in our government to get together to establish a way, one, to fund our military, fund helping people that are less fortunate, create a good nation to live in, right? But they're also getting together and figuring out, hey, wait, we're not in a communist society. We can't force businesses to create this product or that product. We can't force real estate developers to create affordable housing. What they can do, though, is offer incentives to get the kind of things they want done. They offer incentives for affordable housing, bonus depreciation, baby. You can make money by following that incentive. And if you're doing it, guess what? You're doing your patriotic duty. You should do that, and you're paying lower taxes. Same thing for oil and gas. Our nation needs energy independence. Our nation needs to be, hopefully, a net exporter of energy. We can do that. How does the government make that happen? They don't. I mean, some governments try to make it dictate. Look at Venezuela. That's their dictate. They're supposed to produce a bunch of oil and gas. And as soon as the government took over, it stops. But the incentive system that works in this country
It's
that makes
capitalism.
America one of the
Yes.
greatest nations, if not the best ever, is offering incentives to those in capitalism to do what helps our nation. And if you do it, you are reducing the taxes you pay. Consider the time value of money, the value of compounding. Every dollar you save today can be $30 when you retire. Tax code should be your best friend, not your enemy.
It's a good one. Myth number 2, I'm a high W-2 earner, and there's nothing I can do. I hear that a lot. A lot of our consultations on the front end, um, are from CPAs saying, "Hey, it is what it is. Make sure your withholdings are good. Make sure if you're itemizing, maybe we could do some creative things there." But by and large, max out your 401k. Make sure you're doing that. Are you doing that? Yep.
You've
Your
done
hands are
everything you've done.
you're what else can you do? You don't have a business that you can run a vehicle through or pay your kids or write off your cell phone or home office or anything.
So you're just stuck
You're
paying
stuck.
taxes.
So
And
you're
you paid a tax advisor to tell you that. I hate that.
Yeah, that is a big myth. There are multiple strategies out there to massively reduce W-2 income. One of them require 2 of them that I can think of off the top of my head require 0 hours or work. It just takes capital and risk, and you can substantially knock away your W-2 bill. Huge. One would require a little bit more effort because there is no such thing as a free lunch, right? So anytime we're dealing with tax planning against the W-2, you're gonna have some at risk. You're gonna have to have potentially some involvement of time, commitment to this plan, meaning you have to meet certain material participation guidelines to actually get the active tax loss. Um,
But in a lot of cases, people are doing that anyways and just not realizing they could take a tax benefit against their
Correct.
W-2.
Yeah.
Um,
They already have the plan set up. We just need to
they've
actually
actually been
educate them.
doing it. They just didn't know they could get tax benefits. So that's where tax planning can really be fun is when it aligns with what you're doing in your life already, what you've already done, and realizing there's fruit to pick from the tax code to reduce your taxes big time. Yes, even if you're a W-2 taxpayer.
That's right. And so really going back to our first point, the Internal Revenue Code is not your enemy. It's the lack of education, which is why we do this. If you're educated on what you can and can't do with your tax situation, that could change everything. Because if we're able to invest our money and reduce our W-2 income at the same time, you're getting a jump start on that investment right out of the gate. And we can calculate what that savings are going to be. So that's a huge one, that it's a very big myth out there. I mean, you can even go to ChatGPT and say, "How do I reduce my W-2 income?" It's not gonna hit.
We
Maybe not
tried
yet.
that. We put it in chat. We do that about once a month, ChatGPT, Grok. They get some of them, but yeah, gives us some kind of confidence that AI is not going to replace us immediately. The next one I want to get into, Kevin, it's like
You've heard this more
fingernails
than me,
on a
but you
chalkboard.
have heard this.
It drives me nuts. It's so wrong, but this myth I've heard generally over and over again, and generally it's from people who have been doing tax strategy, or so they think, just not good strategy. They've hired a strategist or a tax preparer that calls himself a strategist. They say, and I hear this again, well, my guy or my gal told me I should pay a little bit of extra taxes every couple of years just to keep the government happy and off my back. I should overpay my taxes every once in a while just to keep the government off my back. No, no. Why? No, that's not what the tax code says. Why would you do that? I hate that. It's not true.
No, the only way it's true, it's not. But the only thing I'm trying to put myself in their shoes. If you had a potential business with multiple years of losses, I can see adding income to make a profit. But still, at the same point, there's nothing that says you can't be a for-profit business and make losses for 3, 4, 5, 6 years. It's gonna increase your audit risk, but if they're legit losses, why just defend them?
Yes. You just have to
What's the
prove
problem?
that you're truly doing this activity for a profit motive and
Yeah,
you are doing everything you can to make money.
and you actually heard this from, one of our clients who's actually he's kind of turned a 180 kind of in his whole theology of how
Yeah, he
he
did.
handles taxes.
He was told he had a fishing boat operation that was a true business. He didn't do it for fun. He wasn't out there doing it. He had a captain that would take people out. He owned the boat, take people out fishing. And it was hard. They weren't doing enough marketing. He was constantly trying to tool with it and
And this
figure out.
wasn't his full-time job.
No, it was not. It was a side gig, and he really didn't spend much time at it. He had a captain doing most of the work, which turned out to be part of the reason he wasn't making money, and it was just the wrong captain. But his prior CPA had said, "No, you cannot show that have a loss 3 years in a row. We're gonna have to not take some deductions every couple of years to put you in profit, so you pay taxes. Otherwise, IRS can call this a hobby." Baloney. If you can prove that it's a true business, your original economic intent was and continues to be to make money, and it's not a tax shelter, you don't have to make up money, make up income to pay the IRS taxes. Don't do that. Please don't do that. Another one I heard, and I actually, this is a few years ago, Kevin, and I got to talk to the CPA who told him this. They said, well, you have to pay a little bit in each and every year. And I didn't understand the thinking. But it was one of those where it was a retiring CPA and he was willing to talk to me so we could get some background after as we were onboarding the client. And the client wasn't there, so I was just honest with him. This is before we started recording all our calls. I said, "He told me you said that he needs to pay money every once in a while in taxes that he doesn't otherwise need to pay just to keep the government off his back. Did you really say that?" And the guy owned it. He was proud of it. He said, "Yes, I did. I believe that." I said, "Why?" He said, "Well, the government wants to know that everyone's paying their fair share. And if they see someone not paying any taxes for a few years, they're going to become a target. But if they pay some taxes in one year, they come off that target list." It's a fairy
That's
tale.
a
It's not
it's an
true.
expensive target. I mean, you're basically trying to just pay the government to go away when
And
you don't have to.
we don't know all the details of the logarithms that are working at the IRS's computers. Um, but to the best of our ability, and we have people that come out of the service that are able to share some, they still have NDAs. None of them say that there's some overarching, granted, this is before AI. Maybe in 10 years from now, there will be some AI looking at stuff like that. But there's not some overarching theme where they're checking every taxpayer, making sure they pay taxes once in a while. That's nonsense. So,
Yeah, and then the next myth number 4 is I've heard this many times where they say, I don't want to take I don't want to take these certain deductions because they're going to cause a red flag. It's too much deduction. It's too much. And we actually had a client even say that probably about 30 days ago. It was about a month ago. They're like, "Are you sure? This seems like it's too much deduction. Are you sure we can do this?" And we're like, "Yes, you can do this."
they think that, hey, all these incentives that Congress put into the tax code applies to everyone else, but only if you do it a little bit. Don't do it a little too much. I
Yeah.
hate that.
Yeah.
That's lazy.
It's like just defend your position and go be confident in the position and the strategy you've set forth and take it. Don't just dip your toes in the water, jump in. Just get everything that's allocated to you and don't be scared of red flags. We just did a podcast. If you haven't listened to it, you need to. The red flags and why we are trying to make a case for you not to be scared of red flags. There's no need to be. So long we don't want to be malicious with our reporting and just cause unnecessary red flags. But if we're doing our job, we're causing red flags. Make $1 million, come see us. We'll mop off 500,000 of your taxable income. I mean, not guaranteed. It depends on your circumstances, but just hypothetically speaking, if we lop off half of your taxable income at that income level, that's a red flag. But it's going to save you $250,000 in tax.
So really what it comes down to is you have the option in this myth. Either choose to overpay your taxes by not taking deductions you are legally allowed and entitled to take, or spend a little extra time or even a little extra money with a better strategist that's going to build an audit defense file and substantiate each and every position that you're taking that might be a red flag. Um, and be able to defend it and sleep like a baby, knowing that if you do get audited, you have not cheated once on your tax return and you have all of the proof to substantiate every one of your tax positions in the background, just waiting to send to the IRS when they send you a notice.
That's right. And I believe so much in this that we developed a audit defense plan at our firm to where in the event that we do a tax plan and the risk is too much, you're like, this is too much deduction. Okay, I'll defend it for a set fee. You pay me a set fee of, let's say, $3,000. I'm just making this up. 3,000 bucks. And if you are audited, even if that time is $10 to $20,000 of me and my team's time to defend it, you've already paid for it. So hedge against that fear if you have it, but do not shave off deductions just for the sake of it, just to not draw attention.
In case you haven't figured out, Kevin and I are big believers that you should pay every dollar you're legally obligated to pay the government, but not a penny more. Don't tip the government unless you think they're doing an amazing job. And if you do, I'd
You could
rather,
probably do a better job than them.
yeah, I'm pretty certain of it.
Number five, the more money you make, the more you pay in tax. Is that true? I mean, on the surface, it's very true.
Yeah.
I mean, we have a tier tax system of brackets. So the more money you make, literally the more money you pay in
The
taxes. That's
higher your
not what we're
tax
saying.
bracket is, yes.
Look a little deeper behind this of why it's a myth. Why
Where
is this a
where
myth?
I wrestle with the myth or hear it is when we have clients that are starting to accelerate in their careers or in their businesses. And they haven't made a lot of money for a while. Maybe they spent their first 10 years building the business, barely making 100 grand each year. And now they're starting to make a lot more. Usually they come to us after the point and they say, look, I was only making 100 grand for 10 years, but now I'm making 500. My CPA said, hey, look, you make more, you're gonna have to pay more in taxes. There's not, you have to pay. That's the part where it's a myth. You do not have to pay more money or in taxes just because you made more money. You have more opportunities. The more money you make, the more opportunities you have to reduce your taxes.
Yeah, the more money you make is just math. You have more capital, you have more to invest, and you can invest differently than what you've typically been taught. We can educate you on tax advantageous investing, investing in things that reduce your taxes and generate a return. There's many products out there. But you're exactly right. The more you make, technically, the more tax you're going to pay, just given at the surface level of the brackets.
Yep.
The devil's in the details. You have to get into it and say, what am I doing with this new wealth and with this high bracket I'm in? What am I doing? Because now every dollar I'm saving at the higher brackets, I'm saving more in tax. I'm not saving 20% for every dollar. I'm saving 37 cents per dollar. So your tax savings go up the more you plan with at higher brackets.
Yep. Well, let's get on to this next one that it's going to be hard for me, Kevin, not to go on a diatribe about.
You might be believing this too, that tax refunds are free money. It's a payday. Congrats, you got a payday because you got a huge refund.
There are two ways this myth evolves. One is, hey, I got a refund. It's so much better than having to pay tax in. Even though they might have known
It
what their
feels
planning
better at the
was.
time.
Not to me, it doesn't.
Well,
Because what it means to me is
you know how it works.
I gave the government, the federal government, an interest-free loan, got nothing out of it. They're not paying me interest. It really means I overpaid my taxes and gave them an interest-free loan. I don't like that. That's not, I mean, I have clients that I completely understand. They would much rather get a refund than have to send a check in for a couple $1,000s. But I do my best to keep that refund a smaller amount, right? It's not an interest-bearing account. If you need to save money so you can go on vacation once a year, put in a money market account, put in a CD, get interest on it. Don't give it to the government and lose it. Let them do whatever they do with your money and just give it back to you without any interest at the end of the year.
Yeah, and where this pops up a lot too is when you have W-2 married couple, and let's say they're each making 250, 300 each. They're well into the top tax bracket, paying their fair share of withholdings. Where this does come into play a lot of the times is we'll do tax planning around these two W-2 individuals, and we'll take their $600,000, this hypothetical 600, and we'll drop it into the 200s or the hundreds even, or maybe with a 100% bonus, you can eliminate it. Then at that point, they're getting all that withholding refunded back to them. So a refund is not a bad thing in this. It means they planned, but also realize it's not free money. This is money that you earned. This is your money you're getting back. And
That was taken from you.
yes, and levied against you, and you're just getting it back into your pocket. The way to kind of shield yourself from that is, let's say halfway through the year you start tax planning. You can actually stop your withholding. And I counsel my clients through this. I'm like, hey, there's risk if you stop your withholding. Yeah, you're going to get more take home today, but you might owe in April,
Mhm.
but you're not going to be withholding anything from July forward or very little.
So a fair balance is if and we see that a lot when they're gonna do their best to implement a tax strategy, but it's no guarantee it's gonna be implemented before the end of the year, right? So instead of giving the money to the government, which is harder to get back from and you don't get interest, do what Kevin says, eliminate your withholding or reduce it substantially. Take that leftover money each paycheck, put it in an interest-bearing account that you have control over that's earning you money.
Could be earning 4% on a high yield. I mean, and then depending on the amount of taxes you're paying, that's significant money.
Significant. When we go to the other side where this myth happens, and this one drives me more crazy than anything else out there. You know, have you ever seen those man in the street interviews? Seen them on the news channels every once in a while. And they always do this after tax day on April 15th or April 16th or April 14th. And they go interview people on the street and they say, how much money did you pay in taxes? And almost to a T, everyone says, I didn't pay anything. I got a refund this year. God, no.
The government paid me. That was great.
They didn't. I mean, this is part of the scam of the way our government collects money, and they'd started this in 1913 with the constitutional amendment to allow them to levy tax on income. They learned that, hey, even though we passed this amendment promising we're only gonna tax the richest people 1% of their income, that lasted a few years, and then eventually, within a decade, got up to 90% of their income. But anyways, they're saying the people are not gonna like this. So what we do is institute a required withholding system where employers have to take the employee's money, a certain amount of it, and send it to the IRS. So if the people never see the money, they don't think it's theirs, even though they worked their tails off to earn it, even though it is their money by any definition of what's theirs versus what's the government's, in my opinion. But the government does this to snooker the public to think that those men in the street and those women in the street that they didn't pay taxes, they got a refund. What happened is the government is deceiving you. They pulled the wool over your eyes. You get a refund and you're happy, which you don't realize because most people don't study page 2 of their 1040 much. You paid in a lot of taxes. You got a little bit of it back. Government made you feel good. You didn't realize, and it's all swept under the rug. You still paid a ton of taxes. Just because you got a refund does not mean you shouldn't be doing tax strategy and tax planning because your refund probably wasn't big enough, and it's your money in the first place. You did pay taxes. Gosh.
Yeah, and that's another part of tax planning when we actually plan with clients is looking at your total tax on page 2. That is what we're after. We're after eliminating, reducing total tax on page 2 of your 1040.
Not
So
refund, not
not
amount.
refund. So we could be doing some major tax planning and they're going to be like, I still owe tax. I still pay in. I'm like, yep. But you would have paid this, but you're paying this. It's look at total tax, not refund. I'm not worried about refund. Now that could jumpstart some cash flow things, but I'm not after a refund. I'm after reducing your taxes, and then we can kind of play with the refund as we need.
For our listeners out there, I don't know the exact line. It's on page 2 of your 1040. The line number changes every year, so I quit memorizing line numbers. But look at page 2, and you're going to see taxes paid in, total tax due. It's about 2/3 down or closer to the middle part of the page, but total tax is what you need to look at.
Yep.
That includes all of your taxes.
You're blindly paying that. Your employer is probably withholding that cash for you, and then that total tax will shock you. Your refund may be $2,000, but you've paid in 80,000 of tax.
And you're happy with a $2,000 refund? Come
You
on,
should be
man
getting
in
a
the street.
$40,000 refund,
I need to go do. Can we do a hidden money man in the street one of these years? I'll go
maybe.
and I will convince the public.
This one won't anger you as much, though. This last one, number 7. But it's a very common myth, and it's a lot of education, is that all the states are the same and the state tax law is the same as federal tax law, which isn't the case because there's so many instances. California, it's the worst state for to do business in my I'm in Texas, we're in the best state, I think,
Yeah.
in my opinion. But to go to California, there's such a difference in how taxation works in Texas versus California. In California, we could if you're a resident of California, we could drastically eliminate so much of your federal taxes and then basically unwind all that we did for California, because California is going to be like, "Yeah, yeah, we know the federal government says you can do bonus depreciation. We know that we understand. Not in our state.
Yeah,
Not in
because
our, you ain't doing that here."
the big difference is California can't print money when they run out of it, so they actually have to collect the taxes, so they get rid of all the deductions. And every state's different. In some states, like in Ohio, is really gotten rough lately. They have so many taxing authorities and districts. It's not just the state income tax; it's the county tax, it's the city tax, it's another tax. I mean, they've got. We've seen clients that have 4 jurisdictions. Same thing in New York City. You got the borough tax, you got the MTA, the Metro Transit Authority, the subway that you probably don't ride because it's too dangerous these days. You've got that tax. You've got so many different taxes. Not all states are created the same. And this is why I disagree with you greatly about the SALT cap. If everyone's allowed to deduct all their state income taxes, Kevin, like we used to be able to do, there's no incentive on the politicians in that state to actually be good with their money. They say, hey, yeah, we're taking a lot of taxes from you, but guess what? You were able to deduct on your federal taxes.
But
Come over to my side, man.
since the salt limit's been 10,000, have you seen a big drastic change in their spending?
I've seen a big drastic change of people leaving California and New York and moving to Texas and Tennessee and Florida. Yes. And they're bringing their business here.
Which that is good. I don't know if that's the salt cap. It could be.
Partially.
It's partially it, I think, but also the state income tax over there is so high. But every state is different too. And so that's why if you're a California resident, we tax plan on the federal side. We also have to take into account states. And you could be in different states which have different tax laws, and Tennessee, Florida, Texas, hey, not too much to worry about there. But some states do take bonus depreciation, or they might take a little
Different.
piece of it just a
Yeah.
little differently. So just don't think, "Hey, I'm a California resident. I just did this amazing tax plan and I'm home free." Well, you still have to file your state taxes, and you could still be getting hurt hard on
Yes.
the states.
Yes. But don't think there's nothing you can do. You still can tax plan in those states. It's just harder. And just be aware, you can eliminate your federal taxes in some years and still pay a lot of taxes in your state if they have an income tax.
Yeah. Or just move to Texas.
Exactly. That's what I was going to throw in
Yeah,
there.
it's
Come to
fine.
Texas. We have a great business environment here and really good tax strategists in
Yeah. And
Texas.
no cap gains. I mean, it's great.
Yeah. Be sure to like and subscribe this show so you can be kept in the know of any developing rules coming out, any new tax strategies coming out. Kevin and I will bring them to you here. Hidden Money.